Hi, everyone, and welcome. Thank you for tuning in to today's webinar on Nacha MicroEntries. Leading today's presentation, we have Janice Weisz. She's a senior consultant in our financial institution advisory practice, and she's been working with banks and credit unions since 2001. She's become our Nacha expert since she frequently writes blogs on the topic, and she provides ACH compliance, Nacha compliance, internal audit, and other consulting services for our firm. Before we begin our presentation, I just have a few housekeeping notes to mention. First, everyone has been muted to limit disruptions. If you have questions, you're welcome to share them using that questions feature in your GoToWebinar control panel. At the end of the webinar, if we have time, we'll answer any of your questions that you have, and if not, we'll be happy to follow up with you afterwards. Today's webinar is being recorded, and you can expect it in an email tomorrow with links to the recording and the slide deck and any additional handouts that we may be providing. And finally, upon leaving the webinar, you'll be prompted to complete a very short survey. We'd love to hear your feedback about today's presentation and any other topics that you would like Janice or another member of our team to present on. At this time, I'm going to turn it right over to Janice to get you guys started.
Hi, thank you, Nancy. Thanks for that introduction. And hi, everybody. Thanks so much for attending this webinar. I'm happy that you're here. What I'll be discussing today is there are some Nacha rule changes that are coming down the pipe that are going to be addressing MicroEntries. MicroEntries has been around a while, but they are not currently addressing Nacha Operating Rules, and now it's about to be. So that's what the presentation is going to be about. This slide here is a little bit about the firm. I do work for Saltmarsh, Cleveland & Gunn and have been there for quite a while, since 2008. And this is a slide that kind of summarizes what we do, but we are a CPA business advisory firm. We have offices, 4 offices in Florida and 1 in Tennessee. And this is for y'all to have so you can read over it at any time. So we're going to get right to the presentation. This is really going to be kind of short and sweet. This is a summary of what we'll be discussing. It's going to be kind of a high-level overview of Nacha's MicroEntry rule requirements. This will become effective in 2 different phases. The first phase will become effective September 16th of this year, and the second phase will be March 17th of next year. So that's what we're going to be discussing today. Again, like I just mentioned, MicroEntries has been a while, for quite some time. They are a form of for something ACH originators to use to test the validity of a receiver's account. So these are often called test transactions, test deposits, trial deposits. Everybody uses different names, but they're technically a movement of money, so they are live ACH entries. But again, it's a way for originators to validate the receiver's account. I will say, because I do audits for financial institutions, I see this commonly used when a financial institution, they have through their online banking platform, they will allow their customer to set up to have external funds transfers. And when they do that, a lot of times the service providers that they use will send a test deposits for the receiver to verify on their end to validate the account, and then they'll send a live dollar entry. So that's one way that is very commonly used. But again, originators of any type can use this to validate an account. But it's the same kind of process, even for pre-notifications, which is a way to validate accounts. That is a $0 entry. So they have different rules that go with that than what this particular validation method will use. So again, this is really, this webinar is going to be focused on the MicroEntry side of it. But it does here, as you can see, it is also described as a low-cost option that has been used for a long time to validate the accounts, and MicroEntries currently are not defined in the Nacha Operating Rules, but they are about to be come September. This is a summary of the rule, the effective dates, September 16th. There will be 3 different parts of it that go into effect, and then March 17th of 2023, one main part will go into effect then. So this is just a summary. I'll get into more detail on the upcoming slides regarding what each of these are, but for September 16th, the definition of MicroEntries will become effective. It will be defined within the Nacha Operating Rules. It's also going to create standardized formatting that needs to be reviewed for MicroEntries when sending them, and it's going to establish other MicroEntry origination requirements. Effective March 17th of next year, is going to apply risk management requirements to the origination of MicroEntries. So MicroEntries defined. It's going to be defined as a credit or a debit used by an originator for the purpose of verifying a receiver's account or an individual's access to an account. So that's going to be the definition. A credit entry, if there's a micro entry, it must be in the amount of less than $1. One or more debit micro entry. So if you're using micro entry debit as an offset to that credit, then it cannot be in total greater than the credit that was sent. So what this is, all this is really saying, these 2 bullet points here, is that you cannot put the receiver in a net negative position. So these are supposed to be verifying accounts. They're not supposed to be negatively impacting your customer's account balance. So when you're verifying these, in some practices, they'll send just a credit. They don't always send a debit offset, but a lot of different, so it's just how the application works for that particular originator. But so you could just be sending the credits, but now it's going to be defined, it has to be less than $1 on that credit side. But if you're sending the debits to offset the credit, then for example, if you send a credit for 50 cents, then you can't send 2 offsetting debits that are 30 cents each. That's going to be a negative 10 cents for that customer. So you have to make sure that it is not going to negatively impact the customer's balance. Again, these are verification processes. That's what it should be. It should not be, making an impact on their account. This part of the rule does become effective on September 16th, and you'll see in the lower left-hand corner of each of the slides where it is effective, it's applying to one of the rules effective dates. I have disclosed it right there on that bottom left-hand side, so you can easily see that. Also effective September 16th of 2022, there is going to be standard formatting that's going to have to be used for micro entries. ACCT verify in all caps every single letter. So that's abbreviated for account verify. It must be disclosed in the company entry description field. Nacha does that a lot, where to differentiate different types of transactions. So like they have, if you use reversals, and reversal in all caps has to go in that company entry description field. So this is a common practice that Nacha does, but this is really good because there's other transactions that are less than $1 that could be credits that are for my CD interest payment or something. Well, that's not a micro entry, but it's hard for the participants to identify what it is if they're not identified some way. So now with having that account ACCT verify in that company name field, or company entry description field, then that's going to make it more easy for the receiver to understand that that is a verification of that account, because that particular information is going to be disclosed on their account statement when they get it. It's going to help the RDFI that's receiving the transactions on their side, if it hits their non-post report, to identify the same thing, that this is an originator trying to validate an account. So it's going to totally make it differentiate the difference between a normal credit that's less than $1, that's just because that's just their payment, versus an account verified micro entry. So that's totally a great way to identify that. It's also going to require that the company name that's in that company name field, which should be the originator, it has to be readily recognizable to the receiver, which it should be anyway. I mean, the receiver, if they don't know what it is, then they're probably going to send it back as unauthorized. So it should be readily recognizable to the receiver and be the same or similar to the company name that will be used in future entries. So whatever is in it when you send a micro entries, it should be the same or similar in the company name field when you send actual future entries. So that is very easy on the formatting requirements. I know when I do testing on ODFIs, like ODFIs, like what I was just talking about, they usually use a service provider that is formatting this stuff, these entries. So if as an ODFI, if you're originating these micro entries, or you're using a service provider at all, if you're an originator using a service provider, then you need to look at the transactions, see how they're already formatted. They may already be formatted this way because the service providers already know about this rule. So they should be making those changes as they can. If the rule does go into effect September 16th, so if it's not already in place, you may want to contact your service provider and find out when whatever piece is missing, they're going to have that part implemented. So on a lot of the institutions that I audit, that's exactly what they're going to have to do. If this account verify, ACCT abbreviated, is not in that company name entry description field, they may need to contact their service provider to see when they're going to be having that implemented. So the next one is this also is effective September 16th of this year. These are additional other origination requirements. So I think the next two, this slide and the next slide, are going to hit this. An originator that is using debit micro-entry offsets. So again, debits are not required, but if you are using debit entry, micro-entry offsets, you must send the debits and the corresponding credit micro-entries at the same time and have the same settlement date. Again, this makes sense. So why would you want to send the credits at one point, one day, and the debits at another day? Because again, that can negatively impact that customer's account. You want them to flow and just go through the process, hitting the customer's account and at the same time, the same day. So if that's not already being done through your, if you're using a service provider, you definitely need to make sure that service provider is going to be able to do this. And then the total amount of the credit entries or entries, they again cannot be, you can't put them in a negative position. So that's what these two bullet points are talking about. So if the credit is, like we said earlier, for 50 cents, you can't have two debits that are going to be putting them in negative by any means. So again, just remember, you can't negatively impact that customer's account. This is for verification, so make sure it's utilized that way. Also, originators of micro-entries, they may initiate future entries to the receiver's account as soon as the originator's process for validating the amounts of the micro-entries has been completed. So obviously there's going to be a little bit of back and forth between the originator and the receiver. And everybody's process is a little bit different, but when the originator sends the entries, then the receiver should have been instructed on what they have to do to validate that information on the credits that are coming in, validate the amounts, whatever it is. Then they have a piece to play in order for that validation process to be complete. The originator is going to be the one in the best position to know when that validation process has happened. So once it happens, then the originator can send those future transactions as soon as that validation process has been completed. So for example, if I'm an originator and I send out a file that has a settlement date of today, then with the micro entries in it, and the customer validates it today, then as soon as they validate, I can turn around and create a file with the future entries and send it out and send it out the same day. Whether or not it hits the same day time frames, that's another story, but you can send it out the same day as soon as that's done. That's a little bit different, like when I said pre-notes earlier. Pre-notifications, if you're sending those $0 entries, the originator has to wait 3 banking days. So this could be faster. So again, all the more reason for the transactions to be formatted correctly so that the receiver, when they do receive them, they know what it is. And this is where these are one of those transactions that have to validate. The originator cannot originate a future entries simultaneously with the micro entries. Well, that totally should not be happening, because obviously if you're using micro entries to validate account, then that has to be done before you can send the future entry. So you definitely cannot send them at the same time. And then ODFIs are not required to review or inspect files to enforce this. However, the rule does not require, this rule is not putting the burden on the ODFIs to require to review and inspect the files, but as an auditor, then y'all are ODFIs are still responsible for your originator's compliance with the rules. So you definitely want to make sure your originators are informed of the rule, they know what the rule requires. And I think if I was at an ODFI, I would do a little bit of an audit on my end, that when this rule goes out, that I would at least want to make sure that they are doing it right. But you're not required to. I mean, your agreement with the originator, there's, the agreement should say that they're responsible for complying with the rules. But like, again, y'all as an ODFI are still responsible for their compliance. So you still want to make sure they're aware of what's going on with these rules. So next here, is this part actually goes into effect March 17th of 2023. This is the ODFI risk management part of the rule, and this really isn't too bad. I mean, like, even though it's effective March 17th, and shouldn't be anything that's hard to implement. This rule does apply to the originators of the micro entries, and what it's saying is you must conduct commercially reasonable fraud detection on its use of the micro entries, which means you have to monitor forward and return volumes of these entries. So to me, this is like what the due diligence would be, where you want to make sure that the micro entries as an originator that you're sending out are staying in line with what's expected, your normal activity. So really the originator is going to be the one that would know what the expected normal activity is. So for example, if you send a normal, say this particular originator is going to send out 50 micro entries every Friday, but they don't send them Monday through Thursday. They just send them on Friday. Then if all of a sudden they're getting micro entries that are being sent out, so these are the 4 transactions on Monday through Thursday, well then has their system been compromised? Has someone hacked the system and now fraudulent activity has taken place? Or if they only send it on that Friday, like I said, what if there's 50 transactions they usually do on the micro entries? What if 200 go out? Again, has their system been compromised? So the originator is going to be the one to know what that normal activity is. So they are going to be required to monitor the forward activity. Same thing on the return activity. If they get returns and they're getting a bunch of unauthorized returns, does that mean they truly are unauthorized? And so that their system, again, has been potentially compromised? Or does that mean their process isn't working, that when the receiver gets it, they don't know what it is, so they're still sending it back as unauthorized? So that can be something educational-wise that the originator needs to know. But all those kind of things should be like red flags. So if anything happens that's out of the norm, then the originator should take the next step to determine what is going on. So this is supposed to help, mitigate the fraud that can happen through micro entries through this process. Next, the next few slides are going to be their impacts to the different participants. So this is really kind of summarizing what we already talked about. The impact to originators that use micro entries. Obviously, we already talked about the formatting requirements. The ACCT verify has to be in the company name, company entry description field, and the company name requirement of it being easily recognizable to the receiver and it be the same name as what's in the micro entries company name field as in what's going to be in the future transactions. It should be the same. And again, that should be really the originator name should go there. Observe the required timeframes, timing and waiting period. So you must send the credit and corresponding debit micro entries if you're using the debit micro entries at the same time, and they have to have the same settlement date. And they must wait for the future entries until the verification process has been completed. So they can't send them in the same file, the micro entries and the future transactions. They have to wait until that verification process has been done. And then they also need to conduct the commercially reasonable fraud detection, which is, like I said, just monitoring the forward and return volumes of the micro entries for potential red flags. And if they get any red flags identified, then they need to do the next step and to verify potentially what's going on. Why is that activity different? So the impact to ODFIs, and they are, the ODFIs that originate micro entries themselves for internal origination, then obviously you're going to have the same impacts as the originator has on the previous slide. So those same things would apply to you as an ODFI because you're originating micro entries. ODFIs that have originators that utilize micro entries, obviously you should educate your originators to ensure that they are aware of the micro entry rule requirements. And this next slide is considerations for RDFIs. So for the receiving institution, there are no rules that are directly affect RDFIs regarding this micro entry set of rules. But these are considerations. So as an RDFI, now you will be able to see that they are micro entries when they're coming in because of how they're going to have to be formatted. So you can incorporate like incoming micro entry activity into your existing fraud detection, AML, or money mule detection. So I couldn't tell you exactly how to do this, but what you could do is get with your BSA person and see if there is a way to incorporate micro entry activity into that detection system that most financial institutions have in place. Also treating corresponding credit and debit micro entries the same when making your post, no post decision. So like when you have, like you said, you have a credit and the offset debits of micro entries, hit your non-post report, your exception reporting. Then whatever decision you make for the debits, so say you're going to return the debits, then they're recommending to return the credit too. To do the same decision as you would for both of the transactions. So, and that would make sense because otherwise the originator would go, well, why did they take the credit, but they returned my debits? So now they may not know exactly what's going on. Well, the credits, they returned the debit, says no account unable to locate, but they posted the credits. So it wouldn't make sense. So if your So it's a consideration to return the credits and debits the same way you would do each one, treat them the same. Then as far as automating return processing, especially for administrative return reasons such as account close or no account, I know a lot of the institutions that I audit, this is a very manual process when they're doing exception reporting or exception handling. So they have to mark it up and send it as no account close or unable to locate account. So it's a manual process, but you could still, if you're unable to set it up like an automatic system, then I still would recommend you develop procedures on how to handle micro entries when they hit your non-post. So like, for example, if you have micro entries and you can identify they're for the same originator and receiver, to document to go ahead and return credits or debits, or treat them both the same by either sending a notification that change or returning them. However you're going to do it, treat them the same. That could be something you could do, is implement procedures that would show how to handle this. So that's it really for this presentation. So like I said, it was really kind of short and sweet. It went over just what the rules really require. If you do have any additional questions, I'll be happy to help in any capacity that I can. You can feel free to email me or contact me, but we do have another upcoming webinar. So be on the lookout for it. It's going to be regarding third-party sender roles and responsibilities, and the rules on that will become effective September 30th. There's going to be like a 6-month grace period on certain aspects of the rule to get them implemented. But this is a summary of what that will be kind of going over, but it's going to then again address really third-party senders and have nested third-party senders, a new definition of that. And here's my contact information. So I thank you so much for joining me today for this presentation. Again, if you have any questions, here's my contact information. Feel free to reach out to me. I'll love to help. Thank you again. Thanks, Nancy.
Thank you, Janice. Like I've mentioned probably a million times before, you are our Nacha expert. And I know our audience learned a lot, and they might even have some more questions for you. So like Janice said, email her your questions regarding Nacha, MicroEntries, anything banking related. And if she can't answer your question, she'll direct you to someone from our team who can. You can always find related blogs on the information that we've covered today, or any other banking related information on our blog. And you can also go to our website and go to our seminars page to find any other upcoming webinars or banking related events, such as our bank talk coming up in August. You can register for that right now. But thank you again for all joining us today. And don't forget, when you're exiting this webinar today, you'll be prompted to complete a very short survey. We love all your feedback and any other topics you would like to see from us. But thank you again. Have a great day.
Thank you.